Welcome to the channel Get Rich. Today we are going to look into a company which does B2B e-commerce market. So before having a look into the company, let's first have a look at the industry. But then if you like this video, please like, share and comment, and if you would like a free email newsletter from this channel, please subscribe the link below in the description. So let's get started. So first let's get started with the industry. So this company belongs to B2B e-commerce market. So if you look at the digital classifieds market in India, which is expected to grow about 22 to 25% CAGR until 2024-2025 financial year. And then if you look at the B2B e-commerce market in the country, it is experiencing a huge drive because of the following reasons. Because we have a low cost of data, and then we are getting more and more fiber networks and broadband connection, Wi-Fi networks, and we have accelerated adoption of payment apps, and then we are also increasing our digital literacy. So more and more people are coming to online to purchase stuff and things. So that's one side. And then if you look at the Indian retail B2B market, so if you look at the increase in growth percentage, so it's going to be 10% CAGR from financial 2018 to financial 2025. Also 100% FDI is allowed in B2B commerce to enable greater investments. And also if you look at the number of people who are in India who are using internet or internet users in India, it's 624 million, and then it is increasing very rapidly. And if you look at the internet users, so 72.2% internet users using shopping apps, and 79.3% internet users searching online for products and services, and $111.6 billion spent on digital classified ads in commercial year 2020. So this market is going to do pretty good in the coming years. So then today the company we are going to look into is Indiamart Intermesh Ltd. So Indiamart Intermesh Ltd. So it's India's largest online B2B marketplace connecting buyers with the suppliers. So they have about 125 million plus buyers in their app, and they have about 6.5 million plus supplier storefronts in their product ecosystem. And if you look at their portfolio, they have about 72 million product listed, and they have in 97,000 categories, and they are operating in 56 industries. So are leading to end-to-end value chain discovery. So if you look at the B2B marketplace, which is a growing market, so also this company, they are diversified across different categories and geographies, which we will look into it in some time. And they also have two-way discovery marketplace, and also they have a strong network effects because they already have 125 million plus buyers and 6.5 million suppliers there. So it will create a network effect for them. So they also have subscription based revenue model, so that's pretty good because their revenue is somewhat predictable because it's a subscription based, and they are going to get good revenues. And if you look at their traffic, they have 100% organic traffic. They have 81% of their traffic is coming through mobile, and they have about 4.7 rating on their app in Google Store. So this is the snapshot of the company. If you look at the financial snapshot of this particular company, their market cap is 13,680 crores, and their stock PE is currently trading around 45, and the return on capital employed, it's 39.5%, very good. And if you look at the return on equity is 30%, great. And if you look at the return on assets is 15%, they are doing phenomenally well. Anything more than 10% is already good for these returns, but they are doing much more than the required or minimum set of the numbers. And if you look at the book value is 572, and the current price is 4,476, and the debt to equity is 0.03, so almost no debt. That's very good. And if you look at the dividend yield, they are doing about 0.33%, and price to book is 7.82, price to sales is 18.8. And if you look at the promoter holding, which is 49.5%. And then if you look at the price chart, the company almost reached 10,000 rupees at some point, and recently it's corrected to about 4,700. So it's almost reduced to 55% corrections in this particular company. So let's have a look at the valuation and other financial statements and the company growth to see whether they are already a very good buy for after this correction. So if you are looking into the PE chart, so they are about 100 PE in March 2021. Currently they are trading at around 45 PE. So the average PE for this company is somewhere around 65, 68. So that's because of the growth company, and they are also in the growing market in the future of the business. They also hold several businesses. So that's why they are trading at a premium. So currently, the market is trading at the P of 45, which is below average P. If you look at the business segment, where are their revenues are coming from? So they earn revenue primarily through the sale of subscription packages. They have several subscription packages. Almost 95% of their revenue is coming from revenues derived through subscription. So only less than 5% is coming from their advertisement business. So they also earn revenues from advertising space sold on their platform. So now currently that's less than 5%. And if you look at the geographical split between these revenues, so if you look at the buyer percentage and paying subscription subscribers, so if you look at the buyer, first let's have a look at the buyer percentages. So almost 33% is coming from metro cities, and then 26% is coming from tier 2 cities, and then rest of India is 41%. If you look at the paying subscription suppliers, so in metro cities it's 57%, in tier 2 cities 27%, rest of India is 16%. And if you look at the metro cities, so they have we have 8 metro cities: Delhi, Mumbai, Bangalore, Hyderabad, Kolkata, Ahmedabad, Pune and Chennai. And then we have tier 2 cities, so where the population is greater than 5 lakh, excluding the cities covered under metros. And then they have rest of India population less than 5 lakh. So if you look at their services, what is Indiamart is doing? What are the services they provide? So if you have to tell it pretty simply, they just connect buyers with sellers. So they have a platform, we can list products. The sellers can list their product in the platform, and the buyers can search for the product and then find a product and so on. So mainly they are doing, for the buyers, they are doing diverse set of products and suppliers. They have multilingual search, AI driven matchmaking, specification and reviews, price discovery, commercial, conversational commerce, multi payment option. They also do payment options. And if you look at the suppliers, so they have web storefront, they have by lead, so they have cloud telephony, they have CRM, lead manager, accounting services, order management system, logistic solutions. They are doing all these kind of services for both buyers and suppliers. And then if you look at the first one, which is cloud telephony, so which is for the buyers, they do Insta Connect, and then call responsiveness, call back from suppliers. And for the suppliers, they get missed call notification, buyer profile. So it helps measure their return on investment and responsiveness. And they also have CRM, which has a lead manager and conversational commerce. So that's good. So that they have a algorithm to match the product and with the buyers, with the suppliers. So they are pretty good at that. And if you look at their product listing, they have 80 million product listings, and they have 143 registered buyers, and they are getting 23 million daily unique business inquiries. Almost 55% is repeat business, and they have 7 million supplier storefronts. So 36% suppliers are even buyers. So they are doing pretty good, which will lead into network effect, for example. And then if you look at a buyer journey, how does the buyer act on their platform, for example? So we go to their platform, and then whatever product we need, we just search for that. So if we search for a product, and you are going to see a list of product, and then we are going to click on that, and then we can see, because it's mainly for the B2B platform, so you can see how much number of products are available and how much price, and then you can see the seller details and so on. So that's the buyer journey. And if you look at the seller, so seller, they can do their content management, or how much they have, and then their leads they can see, and they also have a lead manager, and also they have payment options, multiple payment options inbuilt within their platform. And if you look at their revenue model, as we spoke earlier, so they are mainly operating with a subscription based revenue model. So if you look at the different subscription options, they have platinum, gold, silver monthly, and they also have freemium model. So for the platinum, so almost top 10%, which is a platinum, which contributes about 44% of the revenue, and then their others are contributing the remaining of the revenues, and then subscription is contributing 95% of their revenues. And if you look at the key offerings, they have web storefront, they have cloud telephony, priority listing, and they have buy leads, lead manager, online payment, and so on. So that's their revenue model based on their subscription based revenues. And if you look at which are the different segments their products are selling, or how much percentage of the revenue is coming from different segments. For example, the highest is 8%, which is industrial plants, machinery and equipment, and then 7% of the revenue is coming from, or 7% of the product or selling is coming from construction and building raw material, and then 6% is apparel, clothing and garments, and so on. So you don't see any particular segment is concentrating their percentage of transaction which takes place, or the products sell throughs. So that's good. They have a diversification across different industries. They have 56 industries. They have 72 million products in there. And if you look at their distribution network, for example, they have presence of sales and service coverage in 1,000 plus cities. So they have a wide network of Salesforce and channel partners. They also have tele and online modes and also FSF. So that's good. They are having a lot of pan India presence in different cities. And if you look at their innovation, so what are their company is doing, are they innovating and how they are progressing over the years. So they started with by lead in 2009, and then they introduced cloud telephony, they introduced and then price discovery, and then they introduced behavioral matchmaking, payment program protection. They have lead manager, order management system. So they are keep on innovating, and they are keep on providing more and more services by making investments in some other company, or they are acquiring some other company. We'll see a huge list of companies because of their investments or their acquisition, or they own 100%, or they are a associate of a company and so on. So that's good. So they also introduced supplier reviews and ratings recently. And if you look at their customers, so how their things are going. So if you look at the Indian supplier storefronts, so it increased to 6.5 million, it increasing at a CAGR of 23% for the previous 5 years. And if you look at the paying subscription suppliers, they are increasing 16% CAGR for the past 5 years. And if you look at the annualized revenue per paying subscriber, so it's also increasing from 32 rupees 32,000 to almost 43,000. So which is also increasing at 6% in 5 year CAGR. And also if you look at the registered buyers, which are increasing 36% CAGR, and if you look at the traffic, which is also increasing 30% CAGR, and if you look at the business inquiries delivered, that is also increasing at a 40% CAGR. That's pretty good. Their suppliers are increasing, so that which provides their revenue per subscriber is also increasing, which provides their revenue. And then buyers are also increasing, so that will lead to more and more suppliers to put into their platform, which will increase their revenues and profitability and so on. And if you look at the buyer and paying subscription supplier breakdown in different cities, so in the buyer, so 33% is coming from metro cities, and paying subscription suppliers, they are 57% from the metro cities, and 26% and 41% of the buyer distribution in tier 2 and rest of India. And then if you look at the paying subscription suppliers, so it's 27% and 16%. So that's pretty good. And if you look at the one of the customer case, for example, still eyes witnessed 6x growth with Indiamart, for example. So they started their business, and then they are they are growing very slowly, and then they started coming into Indiamart, and Indiamart helped them to get more and more customers. So 57% share of repeat customers is driven by robot business processes. So they have 6x business growth within a short span of time, that together with Indiamart. So the Indiamart, if it grows, it not only grows on itself, but also it provides some other companies, small and mid businesses also grow because of this particular platform. So that's good to see. More and more, if more and more customers sees very good attraction, and then they're going to into a network effect, and then more and more suppliers are going to come into the platform, because buyers are increasing, so it's at a CAGR of 30%, 35%, and then the suppliers will be increasing, and then their revenue will be increased eventually. And if you look at some of their investments, for example, they have August 2019 they invested in Vyapar, so that's a business accounting software, and then they invested in distribution and Salesforce management, and then the legal tech platform they invested, and then shipping operation automations they invested, and then transport management, and then autonomous procurement platform, and invoice discounting and factoring, and then inventory and warehouse management, and then enterprise resource planning software. So they are constantly investing in many companies, and they are introducing more and more services to their existing customers, because they have their existing customers, and they are going to increase more and more services, and they are going to get more and more revenue from them. So currently these are all not much significant, so their standalone business almost contributes to all of their revenues and profits. So these are all their additional investments they are making to increase their services to gain more customers, or whatever the customers they are having, they are going to leverage their customers and increase their more services to them. And then there are different companies, more companies they invested, but let's go into one by one. So the first one is BC Infotech Private Limited, so which is an integrated business accounting and management software for mid and small businesses. So if you look at the what are they doing, so they do financial accounting, inventory management, scheme management, and then customer support, payroll management, analytics reports. They are doing a lot of things. So they hold 100% of their shares in this particular company. So it is providing software solutions to their customers. And if you look at the second one, which is Pay with Indiamart Private Limited, so this facilitates online collections via various online modes such as credit card, debit card, UPI, net banking. So they are providing buyer protection, for example, and then they are also doing buy now, pay it is, because buy now, pay later is also increasing currently. So they are doing buy now, pay it is, so they can buy from premium suppliers and then they can pay in EMI, and then they have multiple payment options, strong security. So this is they are also having their own payment platform introduced. And if you look at the third one, which is Pura, which brings a simple and easy to use system that helps manage businesses. So they do customer management, inventory management, analytic and report, order management, and so on. And then the next one is 10 times online private limited. So this is used by millions every year to decide which events to go in many cities across several countries. So they are also doing these kind of invested in these kind of businesses. So IndiaMart hold 30% in this particular business. So they are a leading B2B event discovery platform, smart event recommendation engine, global event rating and review system. So these are their some of companies which they invested, so that has a significant future ahead, because these are also very good future ahead. So they have virtual software to host live events, unique engagement tools, event management automation, and so on. And if you look at the next one, which is Pepper, so which is a mobile based business accounting software for small businesses. So it's a customized professional GST invoices, and then they have stock inventory management, auto data backup, critical business reports and statuses, and so on. So they are also doing a lot of things using these investments as well. And if you look at the next one, which is Edgewise Technologies Private Limited, so this is EC-E-com offers SaaS based commerce enabling solutions to merchants to allocate, track and conceal inventory across online and offline sales. They do warehouse and inventory management, accounting automation, marketplace and storefront integration, and so on. They hold 26% in this particular company. And if you look at the next one, which is Agilos E-commerce Private Limited, so AirChain is a source to pay platform helping enterprises optimize their procurement by leveraging artificial intelligence. So they are also doing lot of investments in different companies to provide more and more services to their customers. And the Shipway, they have SaaS solutions for automating shipping operations. They have shipping automation, e-share accounting, track and notify. So they're also doing return and refunds automation, track delivery performance. So 26% of the investments, 26% IndiaMart holds in this particular company. And then if you look at the next one, is Truck Haul Private Limited, is SaaS solution for digitizing freight sourcing and dispatch monitoring. They have about 5,000 verified transports across Pan India in this particular company. They hold 25% in this company. And if you look at the next one, which is Mobisi Technology Private Limited, so this is Bizom is an integrated platform for distribution and Salesforce management of businesses. And if you look at the next one, which is Logistify Services Private Limited, which is a legal tech platform that helps businesses in automating their legal workflows. So this is case management, lawyer performance, docs management, IP management. They hold 11% in that company. And then Mint Solutions, which is a traders platform with RBI licensing, offering online trade invoice discounting solutions to SMEs. So they're also doing a lot of things. So here T+1 settlement, collateral free, competitive rates, digital process. So they hold 7.7% in this particular company. So these are the different investments they have. So now let's have a look at their financial statements. So if you look at the total income, which is increasing 19% in the past 5 years CAGR. If you look at the revenues, so from operations, which is also increasing 20% CAGR. And if you look at the deferred revenue, so that's also increasing 20%. The EBITDA is increasing about 348% or 94% year-over-year growth, or 348%, which is in loss, I think. Or they started in the loss, so that's why it's messed up. So year-over-year growth, they are growing at 94%. The EBITDA margin is increasing, so currently they are sitting at an EBITDA margin of 49%. That's very high. So if you look at the quarter wise, they already reduced to 42, 43. For management guides around 40 to 41, or even 32, 38 to 40, or 40 is good. 40 to 42 is somewhat their guidance is. So 40, assumption of 40 would be good for the EBITDA margin going ahead. And if you look at the cash generated from operating activities, which is also increasing 41% for the previous 5 years. And if you look at the cash and cash investments, which is also increasing 20% CAGR for the past 5 years. And if you look at the EBITDA margin, as I said, so they have EBITDA margin of 49%. So I'm saying 40 to 40% is 40 to 42% is good for the coming years. And the PAT margin is also decreased. If you look at that, 37% in 2021, and in the recent quarter it reduced to 33%. So that's also something to consider going ahead. And then if you look at the quarter over quarter performance, for example, so they are doing about 187 crores in the last quarter, and then their net profit is 74 crores. So in June 2021 they did about 91 crores with the operating margin of 50%. That's pretty good. And in the last quarter, December 2021, so they are doing about 43% and 74 crores. So that's a more reasonable kind of EBITDA margin in the last quarter. And if you look at the year-over-year statement, so in 2021 they did about 665 crores, and 2022 they are expected to do about 730 crores, and their net profit is going to be about 300 crores in 2022. So they are also, their compounded sales growth is increasing 25% for the past 10 years. Profit growth is also growing 19% for the past 10 years. So they are doing pretty good. So they recently turned profitable in the previous 2-3 years, and also they are doing pretty good. So that's good. And then if you look at the balance sheet, so they are also increasing their balance sheet. So they increased to about now 2500 crores their total assets and liabilities. And then if you look at the reserves, they have about 1500 crores. They have almost no debt, very insignificant debts. So, and if you look at the cash flow, or cash and cash investments, it's also increasing pretty good. They have about 2300 crores as cash investments. So that's a pretty good for this company. And if you look at the cash flow statement, so their cash flow from operations is constantly increasing at 85% CAGR. So in financial 2021 they had about 326% cash from operations, and then they had their free cash flow is they don't have much free cash flow yet, but it will start to come in the coming years. That's also very nice to see. And if you look at the PAT growth, the analyst expectations, so analyst is expecting about 378 crores in 2023 and 450 crores around 2024. And if you look at the revenue, so they are expected to about 900 crores in 2023 and 1100 crores for 2024. So the analyst expectation is falls between 430 and 460 crores for 2024. And if you look at the peer comparison, so for example, we have InfoEdge, they are trading at around P of about 108 for 2023, and Indiamart 40, Affle India 66, Just Dale 45. So they are trading pretty discounted or cheap compared to their peers. So because of their huge corrections in the recent months. And if you look at the shareholding pattern, so their promoter shareholding decreased a bit, and then FIIs are increasing their shares, and then DIIs are increasing their shares. So that's pretty good to see. And if you look at the mutual funds, what are they doing? Mutual funds are buying in December, buying in October, November, December, January. Mutual funds are buying. That's good. And if you look at the mutual fund holdings, what are the different mutual funds holding this particular company? So we have UTI Flex Cap Fund, ICICI Prudential, Invesco India, and then HDFC Multi Cap Fund, Invesco, UTI Axis, so the Kotak. So there are a lot of mutual funds they are holding this particular company. So most of them bought the share in the recent months. So that's good to see. And if you look at the valuation section, so financial 2022 730 crores, 2023 900 crores, and 2024 1125 crores with a growth of 23% and 25%. And the net income they are expected to do about 375 crores and 450 crores, 23% and 20%. Because of the EBITDA margin, they are going to reduce a bit or normalize a bit in the coming years. That's why their net income growth is 23% and 20%. And if you look at the price target with the current valuation with the P of 45, so 1 year price target would be 5515 rupees, and 2 year price target would be 6618 rupees with the price cumulative growth of 23% and 48%. But then their average P was about 68, but as a conservative estimate, so I'm putting P of 60 because the company is growing. They have a very good business model. They can leverage more and more their customers to provide more and more services. So that's good. So if we calculate with a P of 60, so that's going to be 7353 rupees for 1 year and 8824 rupees for 2 years with a price cumulative growth of 64% for 1 year and 97% for 2 years. So if you ask me, is the company is good or bad? So they are very good company. They have a very good business model. They are doing pretty great. So if you ask me whether it's a good company, so I would say it's a pretty good company. So they have a good revenue growth. So they have a pretty good they are operating in a pretty good industry. So they are having a very good growth going ahead, I would say. So they have a network effect because if more and more buyers come, more and more suppliers will come, and then which will boost their revenues and net income and so on. So, and they are also invested in a lot of high side investments, and they have like different innovative platforms they are invested in. They can offer different services to their existing customers. So this can be a pretty good company. So at the current valuation of 45, I would say this company is pretty fairly valued, or even a little bit of undervalued, but I would say fairly valued. yeah, looking at their growth of 20-25%, I would say, yeah, looking at the forward PE, it's a little bit of undervalued, so I would say, so it's a very good company. So if you have a long-term overview, I would say this company is a pretty good buy, and you can start accumulating at the current price. I would say it's a pretty good company for the long term. So my personal price target would be 100% in a pretty with the current financial with the current financials, it can reach 100% even with if the PE re-rates. But then in 2 years, 100% is a pretty good investment return, I would say, and then this company will do pretty good in the long term for me. So that's about today, and this is not my financial advice, it's my personal opinion. You can have contradicting thoughts, and if you like my video, please like, share and comment. And if you uh, want to have a free email newsletter, please subscribe in the link below. So thank you for watching and have a nice day. Bye bye.